Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is how to use moving averages if you are an options trader and how to use them to your benefit, pairing technical analysis with your management of your position with options. All right, so if you're trading options, you probably focus quite a lot on position management, managing your capital, and just making sure your position survives, especially if you are a theta positive trader, meaning you're trying to collect premium every single month. You're probably trying to figure out, how do I combine the direction as well to make a little bit more money from delta, and using moving averages can help that. So if you pair a little bit more with the technicals, because understanding where that price will go will help you make a little bit more money. So pairing technicals with money management and risk management styles of your options can help you out a little bit, maybe make a little bit more, or maybe even just reduce your risk a little bit. And that could also be beneficial. So let's look at how we'll set up an option trades on a basic level, and then maybe taking a look at technical analysis and how to use moving averages, keeping things really simple, but still going to tweak our positions a little bit just based on the technicals. So let's take a look here. And what we want to do is initially, when we look at our position setup, let's say price is around 170 of the stock. Doesn't matter which stock you have at the moment, but let's say that's the price. And our expiration curve, and we're looking for a calendar setup, might be something like this. So if we place it right in the middle, this basically is saying, hey, well, the stock could go left, the stock could go right. We're just collecting theta that every day that option expires a little bit, and it gets closer and closer to our expiration graph. So this would be our T+0 curve right here. So let's just say, hey, there's our line, and with time, it just continues to get higher and higher. But the issue with this is, well, what if a stock is on a breakout? What if a stock is breaking down? So you don't really know those things without looking a little bit on the technicals, right? You could put on a trade blindly like this, but having a little bit of technicals could give you just a slight edge. We're not looking to be, the most powerful stock pickers in the world, but to have a slight little edge could be beneficial. So let's say you go ahead and have the same little variation, and now you're thinking, well, I'm looking at the charts and I go ahead and know that price will probably continue moving to the upside. Well, what you could do is go ahead and set up your calendar spread where it's a little bit more bullish. So now your calendar kind of is set to the right. In other words, here's the price of the stock where prices continue to move higher. So now my price is a little to the left, but the calendar is to the right. So it gives me more room to the upside. And the same thing is true is, let's just say price is still at 170. Same concept is true if you believe stock prices will go down, or maybe we're just at our highs, that I could go ahead and position that where I have a little more room to the left, or in other words, where prices could go down a bit. So doing this by looking at moving averages, it allows you to kind of position a little more left or right based on your position. And what we can do here is go ahead and take a look a little bit on, let's say, our Netflix example. And here's a chart of Netflix. You could look at it daily, 3-day, weekly, and it just gives you a rough idea. So if I want to go ahead and add maybe a chart study, what I'll go ahead and do is, let's just go ahead and add a plot, and we'll do moving average, and I'll just keep it simple, right? Most people use simple. You could, of course, do exponential if you like. There's a handful of different ones: exponential, front weighted, Hall, simple. I'm going to go ahead and use simple, and I'll add it to that, not the volume, but the regular one. And there you go. You could see there's kind of my line. There's a 50-day, and let's see if there's a way to duplicate that. Maybe not. Let's just add another plot of 100-day or so, moving average, simple, and now we'll tweak it to being about 100-day over here. And then we'll go ahead, change the color, maybe more purple here. So now I have two moving averages, and it gives you a little bit of an idea. I got a 50-day and I got a 100-day. And we'll go to the daily, and now it gives you some insight. So you could go ahead and start looking at this and saying, okay, well, here's the way I would look at this, is that if I go ahead and look at the longer picture is, hey, well, how far or how long of an option trade are you doing? Are you doing a 20-day, 30-day, 50-day, 40-day, 70-day, 100-day, 200-day? So that kind of depends on a few things. But if you're doing a standard kind of like 30 to 60-day option trade, what you might want to do is kind of look at a 50-day or maybe even a 20-day. So let's hide the 100-day a little bit, but you can see what's happening is that the 100-day is now starting to, instead of going down, it's starting to flatten out. So our longer term picture is starting to look a little better. If we look at kind of the 50-day here, you can see here's an interesting point that you'll want to take a look at, is that where is it that it's crossed? So here is kind of where it was under the 50-day, but went a little bit over, but ultimately that line was a little flat, and then here we broke under it and we stayed under, under, under. So when you see things like this, in this case, it might be good to say, hey, well, I would want to position my calendar, if I was doing calendars, a little more to the bearish, or just give me a little edge to the bearish side. Now, we don't want to be too, especially if you're focusing on trades that are more theta or delta neutral, and you're trying to capture the theta, you don't want to be too skewed in one direction because it could move against you, and you have those counter trend bounces. But it gives you a little idea saying, hey, well, maybe I want to go ahead and position it just slightly bearish. And that's what happened here, is that we continued to move a little bit lower here for a few months. And now again, we broke out above that moving average right around here. We broke out of it once, we pulled back, and you could see it was playing with it, right? It doesn't break it all the time right away and stay above it, but sometimes it breaks, goes under it, and then it went back above it and it stayed above it. So, but here you could see things were changing. So in this area where things were starting to get closer to the moving average, what you could say is maybe I'll be a little more neutral. And then once we're over it a bit, even here or maybe here, now you could position for something a little more bullish. And that's what ultimately happened, is that we're here and now we're moving a little more to the bullish side. And as we get maybe a little too far extended, you say, hey, maybe that run is a little too extended, just in the same way that's here. And we may eventually go sideways, and now you position it more neutral, and then maybe you'll roll back over, right? Because markets have their cycles. So that's really what you're looking to do. And if I was to go ahead and do one with Netflix, you could see here, in this case, what I've done just a little bit ago was use the same concept, but instead of a calendar, I positioned it more of a diagonal. So I just went ahead and rotate it. But what I could have done is go ahead and, if we look at a Netflix position, and let's just go to about a 42-day or so, we could have went ahead and here's our calendar, and let's go to the March, and let's go to the 340s. So you could see right here, maybe 335s would have been balanced and a little bit more neutral. If I would have went to, let's say, 360, that would have been a little more bullish, right? Even right here, I got a little bit of wiggle room still for some theta, but I got much more room to the upside. Again, you could have dialed it back to 355, 350, 345 right here, just slightly bullish. Or, of course, you could have said, hey, well, I'm looking for a little bit of a negative move, and now I go ahead and maybe do the puts. But I could do like something like a 305, could have done maybe 320 even. And you can see this just gives me a little more room now for that stock to go down to 320, 310, and I still would have been safe. So that's what's interesting about these moving averages, and a concept for them is you could go ahead and use a 50-day. You could go ahead, and don't think that the 50-day is just the only way. You could go ahead and use even a 20-day, convert that to a 20-day. And now you can see also the same concept, but you'll get a few more signals there. And then you could convert it to a weekly, which is a little bit more, rounded a bit. And now see, it gives you some more kind of insight there. Okay, well, where are we above it? Well, we're above it right here, so probably go a little higher. Where are we below it? We broke it here, so we'll probably go a little lower. So that's what these kind of moving averages can help you do, is just position the trade a little bit. And just the same way here, well, hey, we bounced off of it, we continue moving higher. So when we're above it, probably should continue moving above it. And once we get below it, well, probably continue moving below it. And it doesn't always happen that way, because sometimes you move a little sideways and then you follow through, but you get a rough idea and concept, even if you're not great with technicals. Anyways, I hope this video gave you some thoughts and some insights and some help. Don't forget to check out our website here at tradersfly.com. This is where we have a lot of great education. If you're new to option trading, go ahead and check out our Getting Started guide right here with options. So start option trading. And there's a lot of great videos there to get you started. But if you want some detailed things for your education and training, go ahead and look at some of our courses. And we have a ton of great courses there set up for trading options and getting you started. All right. Thank you so much for joining me. Remember to hit the subscribe button if you're brand new to the channel to continue watching other great videos. But if you want to get notified when we release other great products, books, live classes, webinars, all that good stuff, or even some discounts and promotions on some of the courses that we may have during our launches, then sign up to our newsletter list by clicking the link right over here. Thanks again, and remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.